All right, how are current rates affecting the market? You know, it's hard to say. I've definitely noticed a little bit of an uptick in like the last 90 days with with interest rates pulling back a little bit. I've noticed that when 30-year fixed rates start to creep above 7% just in the last couple of years, typically that's going to give some people, I think, psychologically, a little bit of pause in doing something. I don't know that it really, obviously, like we still did plenty of deals over 7%, so it's not like everybody, like if you need to buy a house, you need to buy a house. I have definitely noticed as rates have started to come down below 7, and even just recently down below 6. Now that there are options that are below 6%, that definitely sparks some interest for some people who maybe might have been holding off, or waiting for interest rates. I mean, the real estate market's a pretty complicated. It's not like a one driver of what is going to cause more people to buy homes or sell homes. It's a pretty complex thing. So I've definitely noticed a little bit of an uptick recently in business, although who's to say whether that is directly related to interest rates coming down a little bit or not. When I talk to customers, I don't get the sense, if this makes sense, I don't get the sense that like a lot of these people that I'm speaking to were just not doing anything, and that interest rates are driving that decision-making process for them to actually buy. Like when I let them know, like, hey, actually rates improved, you know what I mean? I'm able to get you a 5.8 instead of a 6.4 it was a couple of months ago. Like, oh, that's great. But it's not like they don't say like, I know that's exactly why I'm doing this. So I think that it's probably a combination of things. I think that having the payment slightly lower, because the thing is that if you're buying a $600,000 house or $500,000 house, having an interest rate that's 0.5% lower is certainly going to impact your interest rate or your monthly payment a little bit. But let's just say 5% or 6% versus 6.5, so 0.5%. On a $500,000 loan, that changes your monthly payment by like $210 a month. So if you buying a house versus not buying a house is a matter of $200 a month, that's a problem. You know what I mean? That is not a small amount of money by any means. $200 is $200, but in the grand scheme of things, when we're talking about thousands of dollars a month, that should not be the thing that makes you or breaks you. And that's what I'm seeing. Like it's nice. People are happy, obviously, to spend less money every month on interest. But their payment being $3,800 versus $4,000 is not the thing that is driving their decision. It's a combination of things. And this is just in my experience. I could be totally wrong about this. This is just my opinion, what I'm observing, but that's what I'm seeing right now.